following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you had a good weekend. I actually worked out in the field over the weekend, so that was a good weekend for me. It's good to be back here in North Carolina. Took a long trip over to Asia. I thought I was going to stay over there. Ended up not doing it. So good to be back with you guys in the good old USA. Let's take a look at the S&Ps. Again, we hit a high 1969. We talked about ultimately this thing was going to lurch forward to the unfair highs on our weekly. All right, so let's just talk about this for a second. That was the ultimate goal. We got into that neighborhood, didn't exactly quite get there. Missed it by about 5 points. But when you talk about a profile from 1832 to 1974, you're talking about 100 and, what is that? Let me do my simple first grade math. 140 points. Relatively wide profile. When you get into those neighborhoods, you've got to be willing to start looking at it as, we're not, we can't always be right to the tick. So getting into that neighborhood and backing off was pretty important. It was we talked about this pre-market on Friday. We had, quite a few folks on last week talking about that particular number in that neighborhood. And then, what do you do now? So again, we've explored the entire fair auction on the weekly. We've got some decent numbers that kind of folded over last Monday on our breath to kind of coordinate all those particular mindsets moving forward. And I'm not so sure this is over. I mean, a lot of folks out there are kind of bear market rally, things like that. When you start hearing a lot of that, that's sometimes a contraindication that things may continue to go that same way and continue to squeeze people. I think we had a really good squeeze from the lows of 1886 up into that 1969. So what is that? 85 points in 3 days to the highs. And on Friday, we talked about, hey, listen, the party's probably over for a little bit. But what do you do now? So we talked about that 944 being the bottom of the range on Friday, and then that 975 being the top of the range. So we closed on the bottom range. We've been rattling around here. Believe it or not, I'm actually looking for this particular product, this S&P 500 futures, to really get back above 1944 and actually goose this thing one more time. We're going to take a look around the globe. We're going to look at the notes again. We're going to just kind of cruise around a little bit here. Shanghai, obviously, we talked about, and Joey specifically talked about this, possibly heading lower and exploring this fair auction. Again, we kind of got into the hint of it last month, and then we've had that yellow bar 2 weeks ago, and then we had a new profile, and we talked about that particular level 3,000 being kind of a retracement up area, at the same time a new profile appearing. But what do you how do you look at this now? I fully believe that Shanghai is just going to rattle around and drift into this hole, which is kind of the abyss from before. And the bottom of that hole, the bottom targets are 2371. So, we've talked about this. We talked about waiting for the breakdown again below 2742. That's happened. And, we talked about China. Is it seemingly being ignored as far as the stock market action? I think so. Is the economic situation being ignored? I don't think anybody can do that. But just the valuation of equities in the Shanghai composite, sometimes, if you look back, I mean, let's just kind of put this into perspective, in my opinion. You started having the massive ramp up above this 2371. This was back in 2014, and basically that was on the news of, hey, we're going to, meet our 7% growth targets, blah, blah, blah. Not a lot of extra information, and now we're I guess we're going to drift down to like somewhat similar growth targets and be back at the same place. And what does that mean for the U.S. stock market relative to this action? Let's just kind of go back to summer 2014. Let me just put up the spiders here so we can look at it on a continuous basis. And there's summer 2014. Wow. Man, God, we're at the same place. So, looking at this, backing up, looking at it historically, the Chinese kind of pump and dump penny stock situation happened. We're basically back at the same place. And we're actually relatively higher still relative to that, breakout that happened. So let's go back to the S&P futures for a second. And let's also hit the notes here really quick because as you can see, we talked about this on Friday. What's the trade here? U.S. stock market goes straight up, bonds go sideways, or notes go sideways. U.S. market pulls back. We may get a little bit of a bump. That didn't happen on Friday, but not a lot of pain here. So, again, somewhat of a safety play kind of factored into these notes, factored in the U.S. stock market. If the Chinese market continues to go down, equities that is, not the economic situation, I still think this particular S&P might have a bid in it. And I know that might sound crazy, you guys, that, hey, the world's coming to an end and the Chinese are having to kind of readjust a lot of things. But, where's the place to be in times like that? I think this is kind of showing its hand on that level. And, we may have we've got a fair auction here. We may explore it a little bit, but that's why it's sometimes better to wait and try to buy things higher after they've confirmed that, they've tested some areas and really don't want to be there. So this is kind of a waiting game. I'd like to see now another daily close above 1944, and I'd like to see this thing retest 1975. And I know this is kind of in the stratosphere from where it has been recently, but that's the way I'm looking at it. As we go down into gold really quick, we're just going to cover some of the usual suspects here. Again, Joey was on last week. We were talking about gold. We were talking about this spinning action here to possibly move higher. Me personally, I'm not that big a fan of being long the heck out of gold right now. So again, you've got some things painted on the screen here. Below 1200 is a decent stop on the long term. Here's the 240s. Nothing really amazing there. I think this is more of kind of a long-term play when it comes to day trading gold right now. Might be relatively difficult. We're going to come back. We're going to hit the S&Ps one more time to talk about one thing I forgot to talk about, and Joey may be joining us again from Hong Kong tonight. We'll be right back, guys.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. Joey, do we have you?
Yep, I'm on. Hi, John.
Hey, buddy. How are you?
Good.
Hey, listen, I've been kind of running through my thoughts on the S&Ps. We reached those targets like you and I had talked about last week around 1975, that neighborhood. I'm a little more bullish than bearish. What's on your mind?
We're really at a very big inflection point in a lot of things right now.
Right.
In terms of gold, it's been kind of putting up a flag here, and it's just been consolidating. Oil, we try to break through the 33.45 level a few times, and it couldn't do it. And that's a big resistance level for the short term. The euro 108.80 is a key level here, and given the weakness in the eurozone, the PMI numbers came out weak. The euro rates are actually going lower. While I think the U.S. rates, if you look at the bonds, the 10-year bonds, they're actually at a pretty big resistance level at 132. So given that, I think, we're at a very important level where either we just break through and yields go lower and the market just screams higher, or we kind of start to break down here, because we did hit that 1968.75 level, which is pretty close to your 1974,
right?
And we pulled back from that immediately. We didn't spend very much time up there at all.
That's the rub, as they say.
Yeah.
Well, I tell you what, I've got the euro up right now. Al, I'm hoping everybody's seeing this. I've got it on another server. The interesting thing now, what you said about the euro, on this show, we've just been, pounding the desk about any chance to short the euro. Please do it. And after that 109 was breached pretty significantly, that those unfair lows on the weekly, Joey, the next stop up was at 113.50. We kind of almost hit that to the tick, and that was kind of a patient, waiting game until we got to a really decent chance to whack it really hard again. And now, like you said before, we are starting to gravitate below this 109, this big area here, and I'm seeing a new profile that's attempted, or that's already locked in this week, which is wild. A really thin, just little short profile here with targets of 107.77 rounded off down below. Do you think that's in order immediately, or do you think we kind of get back up into this 110.40 and some change area first?
I don't think we ever get to 110. I think we probably get to 109 and change, and then fail, and then we head back down to test the 107.70 first, before we get down to like 105 level. The truth is, Europe is a lot weaker than the U.S. right now. The PMI numbers came out, and the European bonds are actually continuing to rally, which means the rate differential between the U.S. and Europe will continue to go higher. So that being said, the dollar should actually resume its upside.
Yeah, I think Tom's kind of been focused, Tom O'Brien, on these kind of global rate structures and how they, how do you chase yield and what these relationships are. And the 10-year, talking about our kind of safety play and also kind of sitting on the sidelines waiting to see new economic numbers and whether the globe is going to completely slow down. I mean, this 10-year, I love what you guys were talking about last week, which was we're probably just going to be range bound with it. I mean, we're not going to go up significantly. We're not going to go down. So this is a great opportunity to kind of range trade these notes for a while, I guess.
Yeah. I think the U.S. rates aren't about to just, go up a lot. I think, we probably are pretty sticky up here
Right.
for a little bit. And while European rates are actually continuing to come down. So it's not so much that U.S. rates are shooting up. It's more that European rates are really coming down because of the growth concerns there, and also Brexit with Britain, the British pound breaking down because of their exit. And if they exit, there's actually going to be big concerns for the whole Eurozone. So that will ignite all the talks about pigs, markets, Portugal, Italy, Greece, and Spain again. And if you look at the government bond yields on those are starting to tick up again, because people have stopped talking about those markets, but those debt levels never really got relieved. So I really think that if there's more and more talk about Britain exiting the Eurozone, you're then going to get a knock-on effect on people talking about the pigs markets again, and those bond yields are going to head higher. And if that happens, you're going to get a risk-off trade starting in Europe.
Well, that's the kind of stuff that everybody needs to know about what you just said. Those kind of how these things are intertwined and relate to each other. I'm going to hit the dollar really quick. This was, we had this 97.60, 97.50. We kind of got through there. What you're talking about, this kind of what's the word? This dollar resuming its higher path, basically, I guess is what I'm trying to say,
yes.
That you just spoke of. Where do you think ultimately, and now that we've kind of got a floor here, it's kind of form resistance, now support, we backed off that kind of 97.5, 97.60, 70 area, and then we've kind of shot through it. This kind of form resistance, now support, is this kind of where you, in your opinion, you could place some stops below, and then kind of what are you looking for on the upside? Not on the short term, but like ultimately.
Well, the dollar index, I'm looking at the dollar index, and 98.30 is an important resistance level. It actually spent a lot of time as support, going back to December. So going back to December 1st, basically, it spent a lot of time at this 98.30 level.
Right.
So it's going to take a little bit to break through this 98.30 level. If it does, then I really think that we've resumed. If it closes above 98.30, I'm not sure where it is now. I don't have live quotes here, but if it closes above 98.30, I do believe that we have officially resumed the upside in the dollar. And if that's the case, then European rates are probably going to head lower, and U.S. rates are probably going to head slightly higher.
Joey, I hear the music. Can you hang out for one more session, because I want to get into something else with you? Okay, cool. We'll be right back, guys.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. We've got Joey Jung on from Hong Kong with us today, which is a real treat. And Joey, a lot of the people out there that, they may say, okay, God, Logan's going to go over gold and the dollar and the bonds and the notes and the S&Ps, and they're talking about currencies again. But you know as well as I, the real reason we discuss a lot of these kind of usual suspects instruments is because we try to get an edge on what these relationships are.
Yeah.
And then also, yeah, how does this relate to people trading stocks? So, I want you to kind of just explain. I mean, you're obviously the king of the hill over there when it comes to a lot of things, when it comes to managing money, especially. So, if you could just kind of expound a little bit on, why we kind of go through these rote processes every day as a trader, and what they mean actually trading stocks.
We actually look at these relationships and we try to establish some type of relationship, but with all these instruments. But in fact, every cycle is a little bit different, right? So you really have to look at each cycle slightly differently, because the dynamics change in each cycle, and every time it's another region. Before it was the U.S. that was in trouble in 2008, and then it was in 2011, 2012 it was the Eurozone, and then it was China. So every time it's a little bit different dynamics. So we really have to kind of look at each one separately. And this time it looks like that the world is trying to kind of go and print more and more money, and so therefore with Europe actually negative interest rates, and Japan negative interest rates, China is really easing a lot more than you and I actually realize. They're basically having their policy banks, which is the government owned banks, really just release a lot of liquidity and start lending to a lot of people. So there's a lot of new loans coming out. So a lot of money is being printed, and that's why gold is finally starting to react to all this with all the negative interest rates. So for the first time in many, many years, we're actually starting to see a bottom in gold, and it's acting really, really nicely. And for the first time in many years, when it pops its head, it's not getting knocked down like the mole. Every time it pops its head, gold used to get knocked down again. But for oil, it's still getting knocked down, and for now I'm still, even though oil, there's some really good divergences happening in oil right now. If you think about, there's some positive divergences on RSI, on MACD, on many of the indicators that we look at. Mm-hmm. So it's trying to put in a bottom, but there's this move down has been so powerful that it's going to take a lot for it to actually find the bottom. So the very, very short term, we're looking at least for a weekly close above 33.50.
Right.
At the very least, and then
for you guys out there, the reason Joey's mentioned that number is, this is a relatively wide profile on our daily, and we kind of focus on balanced areas and what's the POC, what's the point of control. When we have these wide profiles, we talk about this a lot, and the relevance that has, and that 3350 area is kind of the top of the mountain. It kind of pushed through it on Friday and closed below, which was not cool. But if we can get a close above that POC, it could kind of roll down the hill up into that 3628 area. And what Joey's saying is there's a fight going on right now, and the coast is not exactly that clear yet.
No. Well, so Europe, the numbers coming out of Europe is really negative. China, if you look at the Chinese A shares, it just made a new low. So today it actually traded down to a new low. It's actually retesting the old lows from a few months ago. So it's not completely clear that we're going to close below here yet. But if we do close this week, come Friday, if this thing closes at a new low, it's not going to look good for copper, which was, copper was trying to pop its head. Aussie dollar has been, has recovered a lot.
Man, I'm in love with that trade. I hate to say that, but I love that Aussie dollar trade right now.
You're still long Aussie dollar, you mean?
Yeah, I'm trying to hang in there and trying to use that. Yeah, I mean, all things considered, I know this thing kind of weekly closed below 71.69, but I'm just looking to I got stopped out actually because I got in this ahead of time. But getting back above that weekly unfair low. I mean, all things considered, this thing should have gotten decimated more,
Yeah.
and it just feels like it's showing its hand that any type of,
I think this thing has really decoupled from China, and but it doesn't mean that it decouples for a long time, because inevitably the economy in China still determines how Australia does, and so it really can't decouple for that long. And if you look at the Aussie dollar, yesterday or Friday was an outside day. It actually opened higher and traded way lower than the previous day, and closed way lower than the previous day. So it's actually a pretty negative short-term sign for Aussie dollar. But I agree. I mean, the Aussie dollar has acted wonderfully. But at this point, I would not be putting on new longs in the Aussie dollar or in the euro, just because I think China's at risk of actually breaking down further, which and it's pretty crazy. But China's the weakest market, and the devaluation in China a few months ago, and the whole Chinese economy coming down was the whole reason that the markets were falling or started to fall. So with China making a new low, that's got to put up some alarm bells for everybody. You can't just ignore it.
Right. Well, that being said, and we talk about these relationships because we try to, for the folks listening to this show, a lot of them trade equities, and we try to get some kind of edge on what's the bearing on all this relative to the U.S. stock market, and then how do you find opportunities relative to that, broad sense talk, and then drilling down into the individual instruments themselves. What do you see as the sector to either hide in or go short or go long right now, as far as technology, healthcare? Do you have any thoughts on that at all?
Yeah, I mean, the one sector that's been really strong has been the material sector.
Okay.
And, the materials sector has really surprised everybody, and I think it's taken a cue from gold, for one thing, and and it's trying to give us a little hint that oil may be bottoming here as well.
Joey,
So
we
that's
got
the
to
one
go to
sector
another
I'm
break.
looking
Can you hang out just a little bit longer?
at. Sure.
Okay, man, great. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. We got a real treat today. Joey Jong is on with us from Hong Kong, and this has been just a really good, interesting conversation. And we were kind of finishing up, Joey. We're kind of leaning towards the materials. I've got the scanner up right now, and I've drilled into that ETF, the XLB.
Yep.
And you were talking about, it's kind of interesting how this thing's kind of popped its head up, and I'm going to just kind of pull up the XL. Let me get rid of that server. Hold on. I'm going to pull up the XLB here on our ETF kind of map here. And so here we go. So in a broad sense, what Joey's saying is, the green shoots have kind of started to happen here a little early. And this 4114 is a big number that we crossed last week. And we also, that combined with this 4127, kind of a break in stride of what's been going on, Joey. So if you want to kind of take it from here, maybe we can drill down into some stocks in particular too.
Just, the whole gold sector has really been very, very strong. Some of the miners are actually, up over 50% or, 25 to 50% kind of thing from their lows. And that's really led it. And I think even some of the oil stocks are trying to put in their lows here as well. So, there is early signs that, oil wants to bottom. And it really just, takes some kind of economic news. But, it really hasn't gotten that news from Europe or from China. And unless the U.S. really leads us out of this thing, then oil is not going to be able to break out still, and it's just going to kind of range trade down here.
Right. Okay, so going back to gold, I want to just kind of. A lot of people out there, gold has a. I don't have to tell you this, has a tendency of shaking people out of a trade or even making a wrong move before it makes a right move. What's the most efficient way, in your opinion, to really, go long or even go short this particular product? Is it with options? Is it, kind of putting on some hedges in other areas? Is it trading some of the underlying gold stocks that are showing kind of strength relative to gold, or what are you?
That people are extremely underweight gold stocks, and and anything related to gold. People have really sold those and gotten it out of their portfolio, and really it's very underowned. So I think there's still room for those to go up. And you still don't see the mass media saying, "Oh, gold is, is going," and so there's not that much talk about it yet. And by the time there is, then it's going to be too late. We're going to be up at 1400, 1450, and then it'll be too late to get in. So this is the area. I guess another way that you can do it would be sell some puts on gold here. And this way, while you're waiting for gold to pop, then you're actually collecting premium. And if it goes down, then you actually own it at a lower price. So that could be one way to play gold, which and the volatility in gold has started to go up as well. So if you're selling puts, you're getting a higher premium there as well.
All right, because there's a really cool show. I know the guys in the den are probably aware of this already. It's an options show that happens on a daily basis. Thinkorswim actually does it. It's from 12 to 1, and what we do is try to give, like for instance on this show today, Joey and I are talking about kind of some broad stroke ideas on kind of interconnecting all these kind of global things that a lot of the things that move the markets in general one way or the other. But there's some strategies that they talk about on that show, and Joey kind of alluded to one of them there that really might make it for you guys who are not sitting in front of the screen all the time, or just trying to weather some storms and kind of kicking yourself when you get stopped out of things. There are ways to use this information, use the scanner, look at these major inflection points when we get to them. As far as I'm just pulling up gold right now in the scanner, just kind of mousing over it. There's the April contract, there's the major inflection points, here's some of the balanced areas, there's a chart, there's kind of all the time frames at once. Able to kind of put, one of my favorite trades, Joey, is simplifying the heck out of it with a hedge. So for instance, in this case, you talked about selling some puts, possibly owning it lower if they get hit. But, just the simple concept of being long gold, and the volatility's kind of creeped up a little bit, but, buying in the money calls. I mean, just kind of having a say, okay, if you think gold's going to really explode and just continue to move north, maybe not paying a lot for the insurance, but planning for that larger move on the north side. So there's ways, like Joey just alluded to, ways to trade this in a little bit safer way. And if you don't like getting stopped out, obviously going long the underlying instrument or short the underlying instrument, you're going to get a ton of bang for your buck because the deltas are 1. And when I say 1, you're tick for tick making money one way or the other. But if you want to mitigate some of the risk, there's some great education on this network to populate your mind with some ideas on that level. On the situation with the XLE, I want to pull that up, Joey, really quick.
Yep, XLE. So that's been acting well also.
Yeah. So, this one kind of, the new kind of mark for me, and again, I'm a lot more bullish crude oil than probably most folks, which is dangerous. 57.06 is that unfair high that we kind of been rattling around and kind of continuing to make higher lows on. Do you feel like this XLE might be kind of leading the pack north still, or is this kind of too dangerous to deal with?
There's so many signs that oil should be bottoming in terms of the Canadian dollar,
exactly,
in terms of XLE, or even the Aussie dollar has been acting really, really well relative to everything else, relative to China going down the tubes. So there's a lot of signs that oil should be bottoming, but that there's contango in oil, and just sitting there waiting for oil to go is just so painful that people have been talking about a low in a low being put in oil since about $41, and it's gone down to 26 and change. So sitting there trying to pick a bottom in an absolutely falling knife is really, really painful. So it's really one of those things where I don't even mind if I miss 10-15%, but I wanted to see it really, really bottom first, you know.
I'll tell you what, I hear the music again. Joey, man, thanks for coming on today. And
Okay.
I'll finish the show, and then I'm sure I'll be on with you afterwards about some things we
Okay.
got going on over there. Okay,
All
man.
right. Good talking to you, John. Okay.
Yep, thanks for coming on.
Bye-bye.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. Got about 4 minutes left, and I want to thank Joey Jung again for coming on. He is in the middle of all the things he says about the markets, and take it at face value when he says something. It's a great interview, in my opinion. We're looking at the Canadian dollar. This is something else that we talked about as a little bit of a leading indicator, and one of those pieces of the puzzle when it comes to trading crude oil. And my God, crude oil will probably go down $5 a barrel after I give these talks, but. We had that kind of compression down, and this is a really good technical analysis example, too, using profiles. We kind of had that, new profile attempt to appear, go explore the whole thing, and then we've been just compressing down. This is our long-term view on the Canadian dollar. Finally, he just had the massive just washout last week. Be prepared, though, for retracement back up into that 137.59 on this, and that would obviously kind of be that former support, now resistance. Here's the daily. You kind of broke through that profile on Thursday, and now we could rally back up into those general areas. Crude oil coming off a little bit would predicate that. That's why we're looking at, waiting for a close now. I mean, I think we've had some really good opportunities on crude oil in general, and I'm going to go back to that. But as Joey was talking about, I mean, here's the long term on the April contract. No new profiles appearing or even attempting to appear yet on the long term weekly. But we talked about a lot of those signs that were out there to kind of cause us to, the XLE, the Canadian dollar, the Australian dollar, the ruble. You gotta look at that for what it's worth. And again, we caught some of these bids off of this general 30 and a half area on the April contract. If you'll notice how this has worked out, a little bit of a fake out down there below, but this, navigator making higher lows and possibly even getting above the zero line. When was the last time that happened? I mean, this was, last fall, and that was very short-lived. And we were looking at the long-term weekly at that point and saying, please sell, sell, sell. We've only recently on this show started talking about a possible bottom forming on oil since the first time we've talked about this since the $100 a barrel area. So again, bottoms forming are not the easiest things in the world. And, we could have some more downside pressure here at some point. But again, I like the signs. I mean, talking about using hedges to trade this and not getting shaken out of the trades, sometimes best thing in the world sometimes is just to put on the kind of the hedge play and walk away from it and don't look at it and don't get emotionally involved with it. And I think that's kind of where I'm at with crude oil right now. I fully believe with some of the signs that are on the wall right now, 36.28 could easily be hit with this. But we're at 33.5 now, and we could go back $3 a barrel. Do you want to suffer through that? That's kind of the trading plan concept you've got to put on the wall for yourself. So again, great information from Joey. It was nice to hear another side of the coin there. I haven't had a lot of requests in the den today. You guys have kind of said a couple of things about gold and how to trade it possibly with some underlyings, but feel free to continue to ask those on a day-to-day basis, even when we have some folks on the show for some interviews. I'm going to close here with a really short note on Apple. This is very very decent little pop it's had here from the 93 up into 97.63, but we've got that. We've turned around. This is not the darling of the stock world right now on the long side. You've got it. You can't get, hey, Apple's on sale. This is still something that's got some issues, and we could easily pull back to 93.22 and even lower with this stock. So keep that in mind. Folks, you've been great. Come back to see us tomorrow. Larry's next.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.